Hey guys, it's Dave. Welcome back to another video. Thanks for watching as always. If you're new here, every subscriber really helps out. I come back with videos quite regularly on investing topics, especially around the space industry. So if you find that interesting, I hope you'll consider subscribing by the end of the video. If you aren't new here, thanks for returning and watching my content. And every like does help the YouTube algorithm to show my videos to more people, so every like is appreciated. Now today's another video on Rocket Lab. I'm going over the comments Adam Spice made in a recent investor conference. He was talking a lot about Neutron, Rocket Lab's financials, the future of the company, and a lot of interesting stuff. I did try to just take a few clips out to share with you, so it's not the full conference. If you want to listen to the full interview, you can simply go to Rocket Lab's investor relations webpage, and you will find a link there under their presentation section. And I do recommend that if you're interested in going on a deeper dive on these topics. Adam definitely dropped some pretty big news about Neutron in this conference, so definitely excited to cover it for you guys and give you my commentary and thoughts on what he said. So with that out of the way, let's dive into it.
We're much more than a small dedicated launch company, because we're in the process of building out that portfolio, including building a much larger rocket called Neutron, which is a direct Falcon 9 class competitor, and that rocket is slated to launch at the end of 2024.
So on that one, I think the big thing is they're basically saying, yes, we're going to be competing directly with Falcon 9. In the past, they've kind of sidestepped that, not really addressed that they're really taking Falcon 9 head on, which is a rocket that has managed to lift about 80% of the total mass to orbit this year. So definitely a big rival they're trying to compete against, and hopefully they'll be able to do well with it.
And we start with, of course, everyone comes to us originally for launch, but then we say, okay, well, let's look what an ideal architecture for satellite would look like. And we have a satellite design services business. We have a components business that we sell into the merchant market. And when you have that total solution, you have the ability to architect things very differently because you're not having to rely on off-the-shelf parts. We have the ability to do that, take all the resources and make something that's very customizable and optimized for a particular mission. So we have everything from satellite design services to satellite manufacturing, to on-orbit mission management. We have several contracts now where we actually operate other people's satellites that we neither built nor launched. But now it's moving to the point where actually now we will be operating satellites that we've manufactured and launched. And of course, launch services, which we're best known for. And then again, all about, at the end of the day, delivering data to our customers and developing a recurring revenue stream from that.
So I didn't actually realize before this that they're literally right now operating satellites for customers that they did not design, build, or launch. They're just operating them for the customers. That was news to me, and I found it very interesting. But you can really tell by now they really have pretty much all the pieces in place in terms of all the components, the ability to build satellites themselves, obviously the launch ability, and the ability to operate those satellites. So when they do want to operate their own assets on orbit and get that recurring revenue stream, really all the pieces are in place. And I think it should be a pretty smooth rollout because these are all proven technologies and capabilities at this point.
And one of the reasons for diversifying is not just the fact that it certainly plays into our strategy of being an end provider, but also just gives us a lot more exposure to the TAM and also gives us a lot more kind of resilience, because the one thing that's relatively unnerving, I think, would be just to be a pure launch company, because launch is very lumpy. So having that diversification across a kind of a merchant business that sells components and services in the other parts of the space market provides us a lot more predictability and resilience to our model.
Yeah, dead on that one. I've said before, I don't think I would have invested in Rocket Lab if they were just a launch company. The revenue is very lumpy. Analysts and investors can get very nervous very quickly. So you get one launch pushed from a quarter to quarter. All of a sudden, people look at your quarter and say, well, we're at a year-over-year downtrend now. All of a sudden, are we still in a growth story? Like it's so lumpy and so scary, and so many things can happen in launch that you really do need the other sides of the business to have more steady revenue, and launch is just kind of a bonus on top, in my opinion, and really enables the whole package to work. We can see a lot of the pure launch companies right now are struggling. You look at Virgin Orbit, they're in serious trouble. You look at Astra, they're in a lot of trouble, although they're now even diversifying into other things like supplying engines and propulsion themselves. Even SpaceX is no longer pure launch. They're obviously operating and building out their Starlink constellation. So being pure launch is really, I don't think, where you want to be for the future of space. And a lot of these new up-and-coming competitors, I think, are going to have a lot of trouble if they're just a pure play launch provider.
And when it comes to the Ukraine conflict, we definitely have seen some strong tailwinds from that. If you look at our customers, in fact, so we launched most recently out of our U.S. range for a company called Capella Space. We've launched quite a few launches for a company called Black Sky. And a lot of those customers, Hawkeye 360 is another one that we launched earlier this year. And so the theme there is all of those folks sell data into the U.S. government for various applications. And certainly kind of, intelligence is a big piece of kind of what these platforms are used for, because they're imaging or kind of remote sensing information at one level or another. So yeah, there's been a strong demand for that, and that's really kind of pushed our business forward.
Obviously, talking about the impact of the war in Ukraine on their demand for their services and how that has actually helped. And when I was listening to this and he was talking about the customers, something, he wasn't really talking about this, but it kind of made me think, because we were talking in the Discord about this, is what Rocket Lab will eventually provide when they own their own satellites in orbit. And I'm thinking now you can really look at a lot of Rocket Lab's current customers that they're launching for and say, well, what do they do? Because Rocket Lab could build that and do that and run that themselves. So, and do it cheaper probably and better. So we look at these companies like Black Sky, some of these other ones, and I think paying attention to what they do, who their customers are, what data they provide might give us some insight into potentially the future of Rocket Lab. I find it very interesting to see what these different satellites do that we're watching, and it's just something that I'm keeping my eye on going forward. I do think getting these contracts and working for governments would be a great way for Rocket Lab to operate their own assets and not necessarily have to compete directly with those giant constellations like Starlink, Amazon's Kuiper, and there's a few others. OneWeb has just made another launch and they're going to start operating soon. So just a different kind of track they could potentially take.
A lot more conviction around bigger programs that are well-known, well-funded. You can look at things like the Amazon Kuiper platforms. You can look at on the government side with the SDA tranches. I think obviously people are very familiar with what's going on with Starlink, although Starlink is a very, in our view, is a very kind of a closed or walled garden type of opportunity where nobody else really gets to play in that opportunity. But with the kind of confirmation of those programs like SDA, like Kuiper, and programs like that, I think that we're just seeing a lot more, again, confidence in what's coming through the system.
Yeah, definitely sounds good for demand. I mean, not including Starlink, because as he said, we really have no exposure to that. Anyone but SpaceX can't seem to really benefit from that in the space side of things. But there's a lot of new massive constellations coming online. Demand for these heavier vehicles looks pretty robust going into the future. So hopefully that's a good sign for Neutron when we start launching late 2024 or in 2025.
There's been some chatter, I don't know if I can verify it or not, that maybe SpaceX is less focused on Falcon 9, which might drive more demand for Neutron. So how are you thinking about Neutron? When could we see it do a test flight? And kind of where are we?
So we're taking a lot of learnings from Electron and porting that to Neutron for things like the fact that Electron was the first carbon composite tanked vehicle. So we have that figured out, and we're porting that over, just scaling that up to Neutron. Avionics, same thing. All of the work that we've done on the avionics side and GNC, the ground station infrastructure that we put in place, all that's going to be leveraged. The real difference in Neutron versus Electron, besides the scale, is the propulsion system. So propulsion's new. Propulsion's always the riskiest, kind of always the longest lead item in a rocket development program. And at the same time, we're also working with very important customers to help make sure that we're building the rocket to the specs that are going to be useful for the customer. And to that end, we're working with the U.S. government customers who gave us a $24 million joint development kind of contract to make sure that the upper stage of that vehicle was going to be compatible with what their needs were going to be going forward. So we've got a combination of, we understand what the market requires. We've built rockets and launched rockets before, many times before. We have customers that are helping make sure that we're building the right thing for their needs. So I think all the programs elements are coming together properly, and we're hitting those development milestones. Late last year, we had a pre-burner igniter test that was successful, and by the end of the year, we're targeting having our first Archimedes, which is the engine for this vehicle, hot fire test. We're having composite parts for the tanks and structures coming off molds as we speak. We're in the process right now of building out the launch pad infrastructure at Wallops Island, Virginia. We already have a range for our smaller vehicle. So yeah, absolutely, we're tracking for Neutron. We're very excited what that looks like. As far as the opportunity relative to Falcon 9, yeah, we've heard the same rumors that maybe, if Starship works, that basically SpaceX would do a hard pivot over to that. Again, we don't have any great data on that, but certainly if that was to happen, that'd be an incredibly bullish thing for Neutron, because that would really position Neutron as kind of the go-to vehicle in that medium class of vehicles.
So good to hear Neutron still looking mostly on schedule at this point. Interesting to talk about Falcon 9 again as that main competitor for the vehicle, and how SpaceX could potentially completely hard pivot away from it to the Starship. I have mixed feelings on this. I know Adam said it would be extremely bullish for Neutron if SpaceX was only launching Starship, but I do have to think that would only be the case if they did successfully get Starship's cost down so low that it's like, maybe it's still more expensive to launch than a Falcon 9, but it's getting so low that the mass to orbit becomes much cheaper for that Starship. So I still do think about Starship sometimes and wonder how the future space launch market will play out. It's just such an ambitious project, and I know Elon has a bit of a history of making extremely ambitious targets and not quite hitting them. So when he said things like talking about launching Starship for basically cheaper than an Electron, I don't see that happening, and I still think Starship can be a successful vehicle while launching for, much more than an Electron launches for, because it's still such a massive vehicle. So even if they were able to launch for like $100 million, that'd be a game changer for the industry already. Just never mind what they're talking about, like a couple, like $2 million to launch, which I think a little crazy, especially with all the problems with heat shields and stuff like that. So on the one side, yes, it might be good for Neutron if they do stop launching Falcon 9. But on the other side, I think they only stop launching Falcon 9 if Starship has been a massive success, and then maybe that's something else we have to think about going forward. Let me know your thoughts on this in the comments below. How concerned are you about Starship and the future of the launch industry?
Our vision again is to be an end-to-end space company, and I think we've made great strides towards that. I think a good example of that would probably be the MDA Global Star contract that we won. It was the largest contract that we'd won to date. It was $143 million to build 17 satellites. And I think since that time, people kind of now have visibility who the end customer is for that, for the direct-to-mobile service. And I would say that's, again, a really good example, because the customer came to us and said, hey, this is the type of capability we need on orbit. It's very unique. It has to have a certain lifetime on orbit. It's going to operate at a certain altitude, so it has to deal with a certain amount of radiation. This is the type of bandwidth that we need, so therefore it'll dictate the size of the arrays, and the size of the arrays dictate the amount of on-orbit propulsion that we're going to need. So all those kind of things feed in, and I think by having all of those elements, like the fact that we acquired a solar company, and solar is actually typically either the first or second largest bill of materials item on a satellite. That's also the most supply constrained, because there's only 2 U.S. suppliers of space-grade solar. So the ability to basically control the key components of the supply chain really allowed us to kind of have an upper hand in winning that contract. And the reason why we won it, we were competing with people like Maxar and Thales, Selenia, and Boeing and Lockheed, and a lot of bigger players. And the reason why we won, again, is because we were seen as the person who could bring all of those things together that represented, kind of individually a lot of risk in that supply chain and delivering the capability on time and on cost. And we were able to say, look, we can stand behind it, commit it. And as long as we got the customer kind of convicted in the fact that we really could execute all these things, and the contract was ours to be had, and that's the way it fell. So, if you look at where we're going to be 5 years from now, I think it's going to be more of the same, but on a larger scale.
Yeah, there was a lot there in that one. I've talked a lot about this big contract, the biggest contract they've ever had. By the way, if you're not aware, the end customer for that constellation will be Apple and their phones. So definitely a big, very important customer. But yeah, a lot of people complain about the Solero acquisition because the margins right now are a bit lower than some other parts of the business. But it really sounds like having that Solero basically won them this contract because they can guarantee they had the capacity and ability to supply the solar cells for the project on time. So even if the margins for the solar itself are a little lower right now, it's still important to have, and it's winning them more contracts. And I just love to see them winning contracts against those big names like the Lockheeds of the world, Maxar, like these well-established players. And now it seems like Rocket Lab's really kind of playing with the big boys and going after these really big contracts, not just like $5-10 million type contracts.
It also kind of in that kind of future state, I believe we're going to own our own assets in orbit. So I think we're going to be an infrastructure provider to others. And when I say infrastructure, meaning, the ability to leverage an existing infrastructure on orbit so that the customer doesn't have to go from, kind of idea to, I want to build up my own infrastructure and own that, because a lot of the companies that we're dealing with now are very unnatural owners of space assets. And the best owner of a space asset is somebody who can launch, because launch is such an important, critical, constrained piece of the puzzle. It's so tough. I mean, satellites are very difficult, but launch is infinitely more difficult to do than build satellites. So the people that have that established launch capability, natural kind of defensive moat around that business, because again, you've reduced, it's all about reducing risk to your customer, because failure is such a catastrophic thing in the space business, right? Whether you fail to get your satellites in orbit on time, whether they fail when they're on orbit. And so for somebody where we can go and say, look, we'll take care of all that. In fact, you don't even have to worry about reconstituting your satellite constellation. We'll actually do it for you because, we have the launch vehicles through a portfolio of solutions where, if you need to deploy a handful of satellites, maybe you do that on Electron. If you need to deploy a whole plane in a constellation, you use Neutron or a mix thereof. So I think we have a lot of flexibility, and I think customers are seeing that. And space is such a complex thing that heritage is everything. People don't make choices based on cost, really, for the most part. It's all based on schedule and heritage, which is all about mission assurance.
Yeah, interesting stuff. I mean, if you're a company and you're not a space company, you just need the data from space satellites, why do you really want to have to become experts in space and operate your own space satellites? Just let Rocket Lab do it all for you. It makes so much more sense, and they already have all the equipment, all the infrastructure, and the expertise, so it makes a lot of sense to me.
I think when you look at the recent failures, and you're right, there have been quite a few. You can look at ABL blew up on the pad. Obviously, you mentioned Astra, Virgin, Firefly's had their issues. Vega had its issues. The Japanese H3 vehicle had issues. And so we're seeing payloads certainly defect from kind of those riskier platforms as they fail onto our platform, which is now soon to be shown to be much more reliable. The Tropics missions for NASA that were originally awarded to Astra have now come back to Rocket Lab, and they're going to launch a little bit later this year. So I think you're going to see more of that. And I think what it also does, it helps provide a much more firm pricing environment. Because you don't have these phantom, vaporware companies kind of publishing prices, because somebody who's launched, even if they launch once, they've got a tiny fraction of the amount of data that we have in order to make the vehicle reliable. And that starts to manifest itself in things like insurance rates for payloads, right? And so now a cost to insure a payload on Rocket Lab is much, much cheaper than on any of these newer companies that are trying to come up and establish themselves. And I've got fundamental belief that if you haven't developed a hardened launch platform at this point, it's going to be very, very, very difficult to do, because we've taken a lot of the juice out of the profit incentive or cost saving incentive from some of the customers on the launch side, where we would come in and do that for less than $10 million. So now for somebody to come in and offer that for $5 million or $6 million just isn't enough of a swing factor for the customer to really take that risk to say, yeah, I'll try to save $5 million on what is probably a $20 million payload, on a rocket that's only launched once or twice or even half a dozen or a dozen times. So heritage is super important. And the more you get, the bigger a defensive moat you build around your business.
Yeah, there's a lot of angles I didn't think about in there before. Insurance is one. I guess these companies are definitely having to pay for insurance on their payload so that if the rocket does blow up, the insurance companies cover them for that. And obviously, if you're flying on a more well-established rocket like the Electron, it's probably going to be a lot more cheaper than, say, Astra's Rocket 3 when it was flying, or any of these other new ones. And yeah, if you're making a $20 million satellite and you can save $5 million, but it's a lot more likely to get destroyed, it's not really worth it. So interesting thoughts there.
Metric I always like to look at is cash flow. If you were to take the development of Neutron out and just look at sort of the core operating business, it's cash flow positive, right?
Yep. Yeah, I mean, if you look at our space systems business is growing the fastest. Maybe we'll have really nice growth this year in our launch business, but space systems growth will do even better. And I think that the investment required for the business is on Neutron. It's a very capital-hungry project. We came publicly, said it was going to be roughly a $250 million endeavor. It's a big, hairy, audacious program to bring to market. I think very few people, we've heard rumors of other smaller launch companies tried to build a larger rocket, and they're stating figures that are 10x that.
Nice to hear that the company is pretty much cash flow positive except for Neutron, so if they had to cut spending on it, they hopefully could, but not something you'd want to see. You definitely want that project to come through to completion. More fascinating than that, though, is I recently made my model of how I think the revenue growth for Rocket Lab is going to look over the next 5 years, and what the margins would be, how much money they'd be making at the end of the day. And I actually had revenue growth for the space systems side of the business slowing down a bit going forward because they made these big acquisitions, brought in a ton of revenue growth, obviously, if you're buying new companies. But there's no more acquisitions right now. So I put the revenue growth for space systems to be actually lower than launch on a percentage basis over the next couple of years. Sounds like that may have been a mistake. I may need to up how much revenue growth I expect the space system side to continue to pump out. I know they have made investments in new factories and things like that, production lines for reaction wheels, the building out those buses for those satellites. And maybe I did underestimate how much money they're going to continue to grow on the space system side.
If your payload can go on a rideshare Falcon 9 SpaceX, it's going to do that. People come to us because they need. If your payload can go on a rideshare Falcon 9 SpaceX, it's going to do that. People come to us because they need something unique. They need to determine their launch time. They need to determine a very precise altitude and inclination. They don't want to take the risk of delayed launch caused by somebody else that's sitting on the rocket as well. So we are, positioning Neutron to compete directly with the.
I know a lot of people say the biggest competitor to Electron is Falcon 9 rideshare, and that's kind of true in some ways, but in other ways, sometimes Falcon 9 rideshare just can't work for a customer. So in that case, it's not really a competition if it's not going to get them where they need to go due to scheduling issues or the correct orbit or what have you. So definitely scenarios where Electron doesn't have to compete with Falcon 9 as well.
So we are, positioning Neutron to compete directly with the Falcon 9. Falcon 9 carries about 16 tons downrange in reasonable configuration. Electron is being designed to support 13-ton downrange. If you look at the sticker price of a Falcon 9, it's about $67 million. We're pricing Neutron, to kind of map on a cost per kilo basis to about $50 to $55 million launch service cost. Margins on the business, we ultimately expect the margins to be in around the 50% range on a GAAP gross margin, non-GAAP gross margin basis. If you look at the vehicle, we expect the vehicle to fly 10 to 20 times. The one thing that is not reusable is the upper stage or second stage of the vehicle. So if you break down the cost, if you think about, you can kind of get to what the total kind of the COGS would be on a $50 to $55 million launch at 50 points gross margin, probably about, of course, there's going to be the amortization of the original launch vehicle itself, but then refurb costs and everything else will kind of, I would say, of the $20 to $25 million or $20 to $22.5 million of COGS, probably close to half that will be in the non-recoverable second stage of the vehicle. And that gives you an idea, kind of amortization plus refurb cost for the first stage booster that's reusable.
A lot of great financial information in there about Neutron. So we got some insight into how much the second stage of that rocket is likely to cost, and they're going to have to rebuild that for every single launch. Definitely something I'll be adding into my models going forward. We also heard what the margins will be, gross margins on the vehicle, and it was pretty close to what I estimated, to be honest with you, as well as the price per launch was pretty close as well. So nice to see on that. And yeah, interesting to see they are basically targeting a parity on a price per kilo basis with Falcon 9, even though Neutron will be cheaper because it will carry slightly less payload into orbit.
Last year, the count was, I think it was around 28% of all missions had a Rocket Lab element on them that were eligible. So, for example, excluding Chinese, Russian, and other kind of sanctioned countries.
Yeah, so that's pretty impressive. We're getting to that point now where a significant chunk of everything going into orbit that is possible to have a Rocket Lab component does have one, whether that is, launch or solar, reaction wheel, radio, anything. There's a wide range, and they're starting to get there.
Competing with people that we just find just for whatever reason, for lots of reasons, they're not as nimble, they're not as responsive, and that creates huge opportunities for us.
Yeah.
Yep, definitely lots of room to disrupt the old school traditional space. I think we all know that the likes of Boeing is not exactly always the most efficient when it comes to developing new launchers and craft and things of that nature. So I think there is definitely big room for expansion. And that was the last clip we had from Adam. A ton of fascinating information from that. Definitely taking a lot of notes, and I hope you got some valuable information out of it as well. Thank you guys for watching as always. If you did enjoy it and find it valuable, please do hit that subscribe button, that like button as well, and I'll be sure to answer your comments down below as I get the chance. I hope you have a great week, and I'll see you in the next video.